trying out a new format. So, hey, please let us know if this works better for you instead of my 25 minute diatribes, trying to condense this down to 10 minutes, 8 minutes. I don't know, try to get shorter. If you have questions about this, whether you're watching it live or on a recorded basis, just put it in the comments, and happy to follow up with any kind of discussion, answer questions, supporting documentation, whatever you want to see. So anyway, let's just jump right in with kind of a quick market recap. So Century Lockbox activity, this is every time Jeannie and I go and open the door for somebody, it registers the activity, right? So week over week, down 1.3%. So not a big deal, call that relatively flat. More or less on pace for where we were this time last year. So that's kind of a good, I guess, promising place. It's an okay place to be. So the activity is there. It's just the houses are not. So our inventory continues to be woeful. So that's the Oregon side. Across the river up in Washington, yes, we do work up in Washington as well. Down a little bit more than Oregon, 2.5%, but still, rounding error kind of thing, and pretty much on pace with this time last year. So nothing really out of the ordinary. Seasonality kind of continues on. Before we get into the two topics that I kind of summarized the other day, what we want to talk about, I just found that you guys know me, right? If you watch these long enough, there's nothing I love more than a good stupid article, and this is the one of the week. So the housing boom's going to end after 2021. Super scary until you actually read the article, and basically saying mortgage rates can stay low probably for most of next year, and the single family home market will remain strong. So the boom is ending, but the market's going to stay strong. You read the details, and it's multifamily development is going to slow down and will kind of crater going forward, which we're already starting to see some pullback on multifamily development. But again, for single family homes, it's going to be fine. Worst case, you're just not going to see double-digit growth in prices long term, which big shock, right? Yeah, things can't go up that high for forever. So that's kind of a good thing. All right, two topics I want to talk about today, just kind of keeping this brief. Oregon demographics, because I think we're seeing some interesting trends. We're going to hit on the piece kind of early and at the end, and you'll see kind of the connection I want to make here with the demographics, what we're seeing. Then we're going to start kind of nationally, and then let's just talk local, and then we're going to talk a little bit about mortgage rates. But for now, demographics. Interesting thing to kind of look back. If you look back at population growth going back to 1960, 2020 is the lowest U.S. population growth ever in that time frame. So one big key piece as to what's behind that, it's easy. Influx of foreign migration or immigration. Migration, immigration, same thing. Anyway, people coming in from out of the country, way down. It's been declining for the last several years. Shouldn't be a big shock for anybody, but that was a political climate for that 4-year period. We'll see where that goes going forward. But that population growth is down, so that may mean interesting things for the housing market, for the job market. The biggest impact they're talking is for labor force. It's going to create some strong pressure headwinds against the labor force. So let's go local. Oregon, kind of the natural increase, more like a decrease, and this is just natural Oregon citizens, births minus deaths. And you see kind of going back to 1998, not a good trend line. We're trending down. Basically, we're dying. So that kind of sucks. But that's just one piece of the puzzle, thankfully, for Oregon, right? So that's just people who are being born here and people who are being buried here. The trend is down, so the deaths are outpacing the births. But that's simply for the people who truly do live here, kind of at any one point in time. If we go through and look at kind of national rankings, kind of where we are overall, right? You'll see kind of the births and the deaths. But we are 15th in the country for inbound migration and 21st for outbound, which means Oregon is growing. The population is booming. People are coming here. So we are seeing more and more kind of cross-country migration to the Pacific Northwest for not surprising reasons, right? It's beautiful here. So people are going to continue to kind of keep coming in. So the birth numbers are not supporting the death numbers, but we also got COVID year coming up. So let's see what the birth numbers do next year, because people have been cooped up and It's one way to pass the time. So let's see. We'll see what happens. But that's kind of the big demographic push with Oregon is people influxing in from other regions, right? So basically, kind of the bottom line I was reading on the Oregon Economic Analysis websites is that our population grows faster than most states, and most people who are moving here are in that 20 to 30 something, aka the millennials. We're going to come back to them here in a second. So Oregon is growing from a demographic standpoint. We are growing from the millennials, and they're coming mostly from other places. We're getting some from California and their California paychecks. So we welcome them. So that's what's happening with the population, the demographic side of Oregon specifically. It's going to be mostly Portland where people are coming in from. So long term, I think we're going to continue to see pressure, demand of houses, because if you let's think about the millennials, to the fact that they're starting to buy houses, they're buying mostly the entry levels. So that's what's drying up even more and more of our supply and creating more constraints. So let's talk about mortgages here for a little bit. Mortgage rates. We're continuing to stay low, 2.73, and this is basically kind of talking week over week. So this is on the way they measure the averages. So mortgage rates are low. It's still pretty much free money. I've heard a litany of examples of some crazy things here lately. We just personally finished our refi on our house, so we're 2.5% for 30 years, which I'm happy with that. I'm also hearing of people getting more like 2% for 15-year mortgages. So it's free money at this point, and it's going to stay low for quite some time. But we also know, we're starting to hear the stories, or we're starting to read the articles, talking about trend line, right? So going forward, they're going to probably stay low through this year, but they're probably going to start creeping up. And then the years after that, yes, we are going to see mortgage rate creep. There's just no way around it. As the economy rebounds, as we continue to see the vaccines roll out, people getting back to work, economy's going to pick up, mortgage rates are going to pick up, they're going to follow suit. So be wary of that. Now, that said, the question then becomes, what happens as rates go up? What's going to happen to the housing market? So we got some leading economists are putting out articles talking about we're still going to thrive even as rates increase. Don't look for that to be the wet blanket on top of the housing market. It's simply not going to be. And they show that by categorizing kind of a look back of rates and what's happened during previous periods of time when interest rates were rising and what happened to house prices during those times. Now, if you look back, kind of the one sort of outlier, if you will, the more yellow line starts up, tanks. Well, that's your Great Recession, right? So rates were going up and the bubble burst. And all other measured time periods, whether it's 1994, 1996, 98, 2000, 2013, 17, 18, you can read it. House prices continue to climb. So yes, mortgage rates went up, which was going to kind of raise the cost of purchasing. But underlying that, what's happening within those national economies, right? Are people working? Are wages up? Is job growth up? And the home prices just continue to hang in there. So look for that certainly become true coming forward as we see rates increase over the next several years. Home prices, while the rate of growth may slow down, it's not going to turn house price growth upside down. That same economist kind of encapsulated this way, and I know there's a lot of underlining here, but basically pointing out that prices are downside sticky, right? Which basically means my house value is up, so it's more expensive for you to buy my house from me. That's not my problem. My house is still worth that, right? My house is special, so we're all going to look at it when we sell. It's just going to cost you more, so you're going to need to go do that. So that the raising interest rates, that's going to reduce your buying power and affordability. But he points out, but that's also the sign of a strong economy. And if you have a strong economy, there's more home buyer demand because your wages are up, more people are working, more people can now afford homes. And so it's sort of going to offset, right? It's just going to cost you more, but your availability and capacity for that borrowing is higher. And he kind of lastly, he's wrapping up with, hey, here we are again, the millennials. They're entering their prime home buying years. There's a limited supply of homes for sale. And so given that, even with rates rising, it's just going to keep going. We have a whole new wave. It's basically the second biggest wave, or I think it might even be bigger than the baby boomers, are just now entering these home buying years with the millennials. So the demand is going to be unprecedented, and we just don't have the supply. We don't have the supply now, let alone what's going to happen here over the coming years. So basically, the context is good for the housing market. So go back to that first article I shared, where the housing boom is about to go bust, and it's just stupid. It's not supported. So look for the millennials to come in and continue to ride that surge of activity. So yeah, long term rates probably going to keep picking up. That's fine. Home prices are going to be rock solid and stable. So there you go. That's your weekly update. I'm 10.5 minutes. That's not too bad. We're getting better. If this format works better for you, let me know. We're trying to be a little bit more concise, more brief, so we're not here ranting for quite a long time. If you watch these regularly and you prefer the way I had been doing these previously with a lot more detail and covering more topics, please let me know that too. I just want to deliver content that's going to be helpful to you guys. At this point, I'm trying to keep it brief and concise. So that said, hope you guys all have a great week. Check your weather forecast. May have snow coming up. We may have a lot of snow coming up. We'll see what happens. We've heard that before, which means it's probably going to be a lot of rain and disappointed children. So have a fantastic week, and hey, we'll talk to you guys soon. Take care.